This video has been a long time coming, and I think it's time to start talking about swing trading and the strategies. And my preferred way of trading is swing trading, even though I did start off day trading. And I think it's ideal for those people who want to trade, but they don't have time to day trade. And it's good for everybody, really. And probably the best thing about it is it's going to allow people to profit from the markets. They can earn extra money, whatever extra money means to them, and maintain their full-time job. But it's also for day traders who make a living day trading, but they also look for another way to profit from the markets. So in this video, I'm going to cover what swing trading really is. And it's not what a lot of people think it is. I'm going to go over 3 trading setups and strategies that you could start testing today. And I'm going to go over the pros and cons of swing trading. What you're not going to get in this video is any best strategy. You're not going to get any best indicator to use. Why? Because there's not, and there never will be, any best in trading. There'll be the best for you, but it doesn't mean it's best for everybody else. So what is swing trading? Why do you need a strategy? Well, first, understand markets move in waves, right? We call them swings. And no market, for example, is going to trend up or down without some sort of retracement or rally in price. So the better swing trading techniques, notice I said better, not best, is going to attempt to ride the swing up or the swing down. And it doesn't matter if they're bullish or the bearish swings. And if you're trading against the main direction of the price trend, this would be called counter trend trading. And some swing trading strategies are going to have both a trend and counter trend trading component. And while a lot of people on YouTube and forums, they're going to say that swing trading is time frame dependent. It's a daily chart. It's a 4-hour chart. It's not. You could trade on a 4-hour or a daily chart. It doesn't make you a swing trader. I could scalp off of those. Swing trading is exactly as the name implies. You're trading a swing, a corrective or an impulse swing, doesn't matter. And you're exiting before the price goes too far against you. That's it. You're not looking for a small price increase or decrease unless you're using really short time frames, but you're looking to take advantage of bigger price moves that most instruments will make. So the swing, it can take place inside of a trend or inside of a ranging market environment. Each leg up, each leg down is a potential swing trade. So why do you need a strategy? Because it's too easy to just press a buy or a sell button when you see price making the moves. It's not what you want to do. And any of the strategy that you're going to use, whether you're swing trading Forex, futures, doesn't matter. There's going to be repeatable basic criteria that you're going to want to follow for your plan. You're going to want to know what your setup is, how are you going to enter the trade, what your trigger is, where your stop is going to go, and how you're going to take profit in these trades. And this is going to be criteria that you've tested. And it's going to show you through your testing that price has a greater probability of doing one thing over another. And hopefully it prevents you from buying extreme price movements that could be spelling the end of the impulse price move. And also hopefully your plan prevents you from selling the lows in a climax move where the trend is about to reverse direction. Now, without a strategy to trade, you are not going to find any trading success over the long term. Now, should you swing trade? Well, look, it's my top approach to trading, so I'm biased. And this is what I have found to be true for me, best for me. Now, the pros of swing trading: bigger profit potential, potentially. Because we're looking for larger runs in price, you do have the ability to enjoy much greater profits than you would if you day traded the same market. Now, remember, though, if I'm swing trading on a 5-minute chart, those swings are going to be less intense than on a higher time frame, generally. The second is you're going to spend less time trading. And the better swing trading techniques I have ever seen, the best in my opinion, only required a small amount of time at the screen. The scan for the opportunities can be fast, and you could do it during the slower times of the market or when they're closed. So this allows those people that are employed full-time to view the charts and find opportunities in trading. There's greater risk to reward opportunities. So the swings you're trading have the potential to travel further to your profit targets than they do when you would place your stop loss when the trade setup is violated. Risk reward ratios of 1 to 3, 1 to 5, even 1 to 10 are not unheard of. 4, less stress. Now, in day trading, you're reacting to minor price blips. In swing trading, you do expect larger price moves in swing trades. And most of the time, they're not going to challenge your protective stop price. Now, there's a lot of reasons that are compelling to swing trade, but there's also disadvantages. You can get caught in a congested market with violent swings in each direction, stops you out repeatedly, causing you to lose over and over again. And that's where having proper risk measures come into play. Your stop loss is generally bigger in the distance, which, if you don't adhere to proper risk profiles, can have you lose a huge portion of your account when the losses come, and they do come. The ease of swing trading. It can have you involved in too many markets at the same time, and this could be a disadvantage and put too much overall capital at risk in the markets, especially when you go on a losing streak. And I will tell you, my favorite market to trade, swing trading, is Forex, the currencies. And due to my broker, I can dial in the risk right to the pip. And I have plenty of trading options with all the currency pairs. And when the price starts to move in Forex, it can move fast, and it can move pretty far. So if you've decided that, yeah, you know what, I'm going to swing trade, let's get over to some strategies that you could start using and testing. Number 1, playing the price range. Markets range, and they expand every day in every market. So for this strategy, what we want to find is a price range and look for certain price patterns that we can trade. The key is to find clear support levels that we can use to buy, and we also need clear resistance levels that we can short. Here is a daily chart of a Forex pair. So remember, it doesn't matter what time frame you're using, because we're still looking to trade one clean swing trading. But what should be clear is that lower time frames are going to have smaller swings before a reversal occurs. So you just be aware of that. So what do? We define support and resistance zones. And while price did come to resistance and drop, you would not have taken this trade. Why? Because no setup and trigger occurred. So here's a setup, and it's known as a failure test. So what we're looking for is the price to test below support for a long trade, and we buy the break of the reversal candlestick as our entry point. And this swing here happens to terminate at a previous congestion zone. So the swing is over. Take your profits. Now stops, you got to have stops, and they can go under the setup candlestick. But one note on this setup is that you may get stopped out only to see price regain support again. And all that is a higher time frame making the same price move. So be prepared to take another entry, and you may want to go in partial for the first one. And you can learn more about trading ranges at this video here. It's pretty popular, actually. Range trading. The second one, we want to join a trend. Now, trends ebb and flow with corrective and impulse price moves. So by looking for a strong trending market, we want to rejoin the main price direction after a brief pause in the action. So it's easy to find perfect conditions, cherry pick. So I wanted to use one that had other factors that we have to consider. But the bottom line is that we're looking to join in what could be a continuation of price. And to do that, we need to add a few conditions. This chart here, price is trading in a range and it broke out. In the bottom pane of this chart is the 310 oscillator that we're going to use for momentum. And I want you to notice the line that shows a higher high was made when price made a higher high on the breakout. Well, this helps confirm the breakout. And now we're looking to trade a trend move. Price here pulls back, which is a corrective decline. And all we're using is a standard trend line and enter when the price breaks the trend line and close. Nothing magic, it's just our trigger to enter the trade. Here, price made pauses along the way, which really gives a great location to put in a trailing stop. The price would have taken you out in this location because we did have some slightly stronger adverse price moves. Stops and targets, look, they're a preference. Using the ATR for stops is generally my preferred placement, and scaling out at 1 times my risk, so 1R. So the third strategy is called riding the correction. So this is going to require a little more attention than the others when you're in the trade, because we're looking to play a price correction against the overall price move. And there are several ways that we can do this. And it's not just an arranging environment like strategy number 1 did. So to aid in this decision, we're going to use the momentum indicator, and we're going to set it to 10 periods. So here, the indicator is putting in a higher low, which shows the momentum is increasing. So price puts in a marginal new low, which is opposite to the indicator. So that's called bullish divergence. And you can enter at the market or a break of the candlestick using resistance as a trade management level, or exit the trade at this zone. And the long appears very similar to the strategy number 1, but we are not looking for a range as the basis for the setup. How do you manage your trades? Trade management, it's vital to the success of your trading strategy. And with swing trading, we do have several ways that we can deal with the trade once you've entered it. So as I talked about earlier, I use the ATR, the average true range, to set my stop loss. Knowing my stop level, I can now set targets to capture gains of a multiple of my risk. Here we have 1 times our risk equals a scale out, stop to break even. And trades should get to at least 1R. 2 times the risk is a further scale or close the trade. This is more of a hands-off approach where you can set all of these orders once a trade's entered. It does take the emotions out of trading and it allows your trade to evolve without you messing it up. You can also trail your stop loss. And that's more of an active management approach. So the trick is to make sure your stop is tight enough to get you out of real adverse moves. But on the flip side, the stop should be far enough away to avoid bull and bear traps. This chart here, it's going to show a buy using the swing strategy where we're trading against the overall trend, right? The ride the correction one. The blue line is the 5-period Donchian channel, and it's only the lower line to keep this chart clear. So for a trailing stop, you can adjust the stop loss on the close of each candlestick according to the channel. And the red line is where this long trade would have been stopped out. And you can adjust the channel settings depending on how tight you want the stop to be. Now, why a 5-period setting? Well, considering this trade is against the overall direction, I'm considering it to be more of a short-term kind of trade. And you can even use a simple moving average to trail your stop, but I prefer like a volatility measure like the ATR or actual price levels like you will get with the Donchian channel. You could also consider using support and resistance. However, you want to ensure that the levels that you're using are actual levels that have any meaning. And you can learn more about support and resistance trading here. So what did we cover? Well, there's a lot of information that we just covered. There's enough to get you started in designing your own strategy. Now, swing trading, it's about trading one clean swing in the market and not sitting through any strong price retracement. You also learned that you can trade a price range that has defined support and resistance levels. And we're going to use a price action entry, a failure test, to tip the odds in our favor, at least to have some price excursion in our favor. Joining the trend is looking at a momentum reading, trading a corrective move in the direction of the impulse move. Riding the correction, it's just using a divergence method plus price action to enter a counter trend trade. And remember, it's short term. We looked at a few ways to profit from the move, how to protect the downside risk in a trade. But most of all, I hope you realize that simple works in trading. Strategies do not have to be complicated. Now, we covered a few, and these are great to start off with, or even to use all the time. But we have more options than that. And here are several strategies that you could also use for swing trading, any market. Here is the 3 EMA trading strategy, and that's just using moving averages to form the basis of your approach to the market. The RSI2 strategy is just taking advantage of oversold and overbought market conditions for short-term trading. And the 50-day moving average strategy, and that's just using a longer-term average to gauge market direction and to give you zones for your pullbacks. Most of all, just ensure that you make up a full trading plan when you're considering any trading approach. And also, just ensure you subscribe to this channel. Thanks for watching.